what are you anticipating over the festive season, given the fact that we've got factors like tourism, the tourism sector, and then remittances to consider as well?
I mean, the shilling has been uncharacteristically weak, in fact, given those factors that you mentioned. I would argue that probably the most pronounced effect would probably be the tourism flows coming through, because if you look at the data which the central bank publishes on the remittances, December isn't seasonally as high as, for example, what October might be.
Yeah.
But I know that is the very popular belief historically that remittances, and they come in over the Christmas period. But I do think that as we're going to the end of the year, we will get an appreciating shilling. I think we had a little bit of a wobble on the back of the Dubai World incident, as you mentioned, and then of course which triggered the very strong dollar at the time. And I think as that sort of washes out the system, we'll find some people coming back into the market, and we'll find that the shilling does appreciate as we go into year. And I've been looking for something like 73.50 as my year-end target in the shilling.
Well, as I was saying a little earlier, I mean, traders over on that end have highlighted that they're also watching flows into Kenya's debt instruments due to this return of risk appetite. And we've had this discussion before, the merits of investing in Kenyan bonds as a foreign investor. I mean, what's your view on what we should be anticipating in flows in that regard?
There was quite a pivotal event, of course, when they revised the inflation data, because for a change, suddenly we actually had a better idea of what was going on with inflation. Now, in the past, it was just a big uncertainty of where local rates should be. Now, that means that in a real space, local interest rates are looking better than what we thought they were. In nominal space, it's not still particularly great. I mean, do you really want to invest in 8% one-year paper in Kenya if you can get 8.5 benchmark yields in South Africa? It's not that obvious that in nominal space, it is relatively attractive. That said, I think you might find some money come into it, but I don't think it'll be large flows, and it will be dependent on which particular point of the yield curve. The yield curve is relatively steep in the front end, or it's flattened quite a bit. But it would depend. I don't think it would go much beyond 2 years, to be honest with you, if money does come in.
Well, let's bring Judd into this discussion. Of course, Judd Murigi is the head of research over at CFC Stanbic Financial Services. And Judd, while there may be this debate being had on whether foreign investors are or are not investing in the fixed income side of things, it's certainly what's stolen a lot of the investor attention over on the local front. Let's take a look at what impact this has had on the NSE itself and what you're anticipating in terms of trade on the equities front moving forward as we close this year up.
I think my expectation is that it really hinges on developments in the Middle East. We got some positive news yesterday that Abu Dhabi had decided to bail out the Dubai world to the extent of $10 billion. What we've seen is reduced activity from foreign investors over the last 2 weeks since the news broke out about the Dubai debt crisis. However, with the fears of that crisis easing, I'm seeing a return of foreign investors as they get more and more confident regarding emerging markets and frontier markets.
We know that when it comes to foreign investor interest, though, in Kenyan stocks, a huge deterrent in the past has been the lack of liquidity. Sasini was one stock that a trader highlighted last week as a stock that has investment merit but little liquidity. We had foreign investors also raising concern about Safaricom as well. Is this set to be the Achilles heel of the market in your books as we head into 2010?
Liquidity is always going to be a key prerequisite that foreign investors look at, and I don't expect that to change going forward. They look at the top companies with the top market capitalization like Safaricom and East African breweries. I don't expect that scenario to change, and that scenario will continue to maintain in going forward into 2010.
This in a context where we've seen other stocks really displaying some good investment merit, and being highlighted amongst the lot has been the tea players. What's your view on the tea players, the likes of Williamson Tea and Sasini? Because while they have been getting hard hit, as I said, many advocating the value that they currently present.
I believe those stocks will continue to be volatile, mainly because of the liquidity, the thin liquidity with which they trade. They're also not traded on the main stock exchange. They're traded on the alternative investment market, meaning that their accessibility is limited to investors. As a result, I expect those stocks to continue to be volatile, depending on the results, depending on how world tea prices perform, and depending on the dividend payouts that they offer investors.
Well, Judd, let's leave that discussion there with you, Leon. Just to end off, I mean, we've been looking at the tea players. We know that what has held them in good stead has been the high prices on the back of low production, but high demand on a global scale. You mentioned earlier that you were looking at a report in terms of the weather in Kenya, and that the rains are possibly not lasting very long.
Well, you know, we had great expectations a few months ago that the El Nino effect in East Africa would bring additional rainfalls in, and for a while we did see improved rainfalls, but it now looks like the actual average rainfall during the month of November was in fact rather poor after what was a promising start. And this has led to two problems. One is it's going to impact on the horticulture production and, you know, tea production, for example, as well, but then also on maize production, and that will be a critical issue as we look at the inflation trajectory next year. And probably going back to the interest rate view, you know, do you really want to run into, you know, if you're having poor rainfalls, there may be inflationary pressures. At this stage, it doesn't seem to be too bad, but it is below average, and that will weigh on prices.
Well,